Actually, we would think otherwise. In our view, it's more of a year of consolidation rather than a revival. Like you rightly pointed out, Chinese consumer makes 1/3 of the global luxury spending. And there are a couple of fundamental factors in China. Economy one, curb on gift giving second. Apart from that, there are factors such as curb on the travel tours, etc., which potentially will limit the growth in Chinese consumer would have. Second part, Chinese consumer is evolving much more faster. Luxury consumer is evolving much more faster than brands would have imagined. So all the brands you see across the globe, be it LV, be it Gucci, are trying to realign their product strategy to catch up with the changing perceptions and the changing buying habits of the Chinese consumer. So we expect a mid to high single-digit growth and not so much of a back to double-digit growth area for China, especially in this year, early part of this year.
That's still significant growth, though, is it not? I mean, we're not talking about a turnaround back into negative territory or very little growth.
Yeah, no, it's still a growth. It's still a significant growth, especially for the mature brands. It's just that market or the sector would now get used to the growing in single digits rather than the 20% or 25% growth we saw in the early part of this decade.
Tanuj, tell me, which stocks look like they are best placed then to, I guess, take advantage of what you're talking about here in terms of the growth areas?
Right. So before jumping onto that, just want to highlight the valuation for the sector, which potentially could be at a risk of a derating if things continue to moderate. So in light of that, our picks in the entire sector would be lower valuations, large caps, which effectively, if the sector derates, could present the shield against the downturn. So our picks would be Swatch globally, which has an exposure to mid-tier watches. That segment is still growing very fast in China. Second is Richemont, which is a jewelry play. As a house, we are very bullish on jewelry segment in China particularly, and Richemont with the brands like Cartier and the Van Cleef to capture that. And last but not the least is Louis Vuitton. Again, because of the product portfolio initiative it has taken in premiumization of the brand, we believe that will be one of the more defensive picks in the entire sector.
What about, Tanuj, when you look at this, I guess, this new trend of some of the mid-tier names coming to the fore? You know, you've got this big shift into the city areas. Those new consumers potentially can't afford the top-tier luxury brands, but can afford mid-tier. Is that when you're going into things like Swatch?
Yes, and precisely that is happening. Now, what you have seen is with the slowing growth, the traditional brands like Gucci's and the LVs are trying to go more premium, more exclusive. So this kind of leaves the gap between the price positioning segment, which basically is being fulfilled by the newcomers like Coach and Michael Kors and Ralph Lauren. And we believe going forward over the next couple of years, these brands would eventually grow and more and eventually fill that space.